All right, so now remember we did part 2 of preparing general ledger accounts. We did part 1, right? So today we're going to cover part 2. So part 2 is very soft. So what we're going to do with part 2, we're going to focus on preparing the capital account. So remember in part 1, we introduced a bit of principles and then we demonstrated the application of those principles on the bank account in the general ledger. So today we're going to apply those principles on the capital account in the general ledger. So you guys will remember that the capital account is where we record the permanent contribution of the owner. All right. So if the owner makes contributions, whatever form they are, they're going to be recorded on the credit side of the capital account. So here's a question. We have 2 questions, right? So the first question is based on the transactions above and requires us to prepare the correct capital account in the general ledger. So capital, as you know, is part of the dead click. All right. Right, so capital is here on the credit side. So, and for capital accounts, we only have credit entries, right? That's one account where you never have a debit entry in the capital account, right? You only have credit entries. But what happens now is this is when you are recording transactions during the year, all right? But then when you are closing the account, if you want to look at the balance at the end, then you can transfer drawings to the debit side. So what we're going to do here, we're going to assume that whenever we have drawings, we're going to record them immediately on the debit side of the capital account, whereas the actual treatment is that you record drawings on the drawings side, on the debit side of the drawings, right? And then at the end of the month, you transfer those drawings to the capital account. All right, but that doesn't matter. Now I'm going to demonstrate how we construct. So as you remember, your capital account, your general ledger account has a debit side and a credit side. So remember here I didn't put in all the details like the date, details, folio. All right, those are secondary in importance. We want to demonstrate the construction. Right, so on the 1st of January, Mr. Pistol is the owner of Medical Dentist. All right. And in this question, they want you to indicate the correct contra ledger account. So the correct contra account is the account that was debited or the account that was credited. All right. You remember this from part 1, but we explained that to you now when we started the recording. So the owner of made a deposit into the business bank account for 200,000. So as you know, we are not preparing the bank account, but if we were preparing the bank account, we were going to debit the bank account and we're going to credit the capital account. So we go to the capital account. On the credit side, we enter 200,000. Then the contra account is the bank. We say the bank is the contra account because here we came to the capital account, and on the credit side of the capital account, we entered an amount of 200,000. So that means we credited the capital account with 200,000. Then we need to know, because it's double entry, for each credit entry, there has to be a debit entry. Right. For each debit entry, there has to be a credit entry. So we've made a credit entry of 200,000 on the credit side of the capital account. Now we need to know which account was debited. And then the contra account will tell us the account which received the other leg of the transaction, the account which was involved in the double entry. Sometimes it's not one account, sometimes it's a lot of accounts, right, that are affected. For example, we could have one credit entry and 4 or 5 debit entries, but they all add up to 200,000. So in this case, it's only bank, and that's the contra account, right? Then we are told that on January 3, this guy made an additional capital contribution of a chair. Right, he inherited the business as 500,000. So it's probably a dentist's chair, right? That's expensive ones, where they're gonna adjust and put in their things in your face. So it's 500,000. So this is furniture, right? This is not money. This is not cash. This is furniture. So the furniture of the business has increased. Furniture is an asset. Furniture has increased. So you're going to debit the furniture account. And because this is capital that has also increased, we're going to credit capital account. So if we go to the capital account, we have furniture, which is the account that was debited. And the amount is 500,000. So this 500,000 is a credit entry in the capital account. And we are saying we debited the furniture account for the same amount, right? Then we go back, and on January 20, this was an EF transfer to Mr. Pistole for private use, 5,000 rand. So on our earlier sessions, we dwelt a bit on drawings, right? I think there's a session where we recorded as many transactions that involve drawings and the concepts around drawings as we can think of. So the drawings there are 5,000. So we need to know from where were they. So this is right. So we don't care, because when we construct the capital account, we just have to mention that this is drawings, right? So we're gonna come and record. So drawings were debited. Remember the dead click says things that increase on the debit side. It's your expenses, it's your assets, it's your drawings. So whenever we make a drawings, we have to record to say we have made another drawing, the owner made another drawing. So they keep on increasing, but we have to record the drawings on the debit side. All right. So the drawings reduced capital by 5,000. So let me try to explain this a little bit further so that you understand how we end up having drawings being credited, because this is the contra account, right? So on the debit side of the capital account, on the debit side, we've ended 5,000 rand of the capital side, right? So we need to know which side was credited. So we're saying drawings was credited, but how is that the case when we made more drawings, right? And we should have debited them. So I think this date here would have been January 31, right, at the end. So this is what actually happens. So when the drawings are recorded separately. So we debit drawings, right, of 5,000. Then we credit bank, because this was money withdrawn from the bank, 5,000. So we're already sitting with a drawings of 5,000, a debit entry. But we're now transferring that to the capital account so that we can see at the end of the month what's the balance of capital. All right. So we transfer the amount from the drawings account to the capital account. So when constructing the capital account, you will see the drawings will be here. The total amount of all the drawings made will be here, and it will be 5,000. So now you have to do your balancing again, and you have to determine which side is bigger than the other between the debit and the credit side, right? So if you look, the debit side is only this amount, and the credit side is those two. So the bigger of those two is the credit side, which is 700,000. So we have 700,000 on the credit, 700,000 on the debit. All right. Because the biggest side provides balances for both. Then at the smaller side, on the smaller side, that's where we enter in the balance carried down. All right. So I did not pay attention to the days, because that is not what I wanted to emphasize on. So your balancing figure is the difference here, 695. is the balance brought down. So remember, here it's the balance carried down, and here is the balance brought down on the other side. Right. So the balance of capital at the end of January was 695. So we did a balancing of this capital account so we can determine the balance, right? So that procedure is called balancing the general ledger account. We, on part one of general ledgers, we showed you how to do that with the bank account. We're showing you here with the capital account as well. Right, so if you come to, so basically that's how you construct your capital account, right? Right, let's go to the next question so that we just complete quickly. So the question 2, in this question, we are not given the actual transactions by way of explanation. We are told that they have been recorded in the statement of changes in equity. So we start with the balance at the beginning of July. Then there is an additional contribution. Then there is a loss that was made during the year. Then there's also a loss of profit or loss. So we are saying for now, we don't know yet whether it was a profit or loss, but we'll be able to figure out from the balancing, right, of the capital account. We'll be able to figure out whether it was a profit or a loss. Then we have drawings, which is this amount. Then we have capital balance on 30 June 2020. So 1st of July is the beginning of the year. 1st of July 2019. 30th of June 2020 is going to be your end of the year. So we started with 134, then we added some more, then there's the effect of profit or loss, then there's drawings, then there's the balance. So what we do, remember, there are two ways of calculating capital or equity. There are two ways of calculating capital or equity. So the first way is when we say assets is equal to equity plus liabilities. All right. So eventually our assets minus liabilities will give us equity. So if we are given a list of assets and a list of liabilities, we'll be able to determine equity, which is also sometimes referred to as the capital. Especially at our first level. Sometimes there are the examiners make variations, sometimes they don't. All right. So that's way number one. Then the second way is of determining equity is to say opening balance of equity plus additions. All right. Plus then not plus it, minus drawings plus income minus expenses. So that's going to give us the balance of capital or equity at the end of the year. All right. Equity or capital at the end of the year. So we need an opening balance. Then we add additional contributions. Then we remove all drawings. Then we add all the income. Then we deduct all the expenses. We're going to come to equity or capital. So these two methods, we use them to determine equity. So we can use any information given. So in this particular case, we are given the opening balance, we're given additional, we're given drawings. We have to determine this income minus expenses is the profit or loss. Then we are given the balance at the end. So we need to determine whether this was a profit or loss so that we end up with this balance here. So in other words, it's like we are saying 134,650 plus additional capital 4,500. All right. Plus a figure here which we don't know, so we're going to say y. We don't know whether it's a minus or a plus. We don't know yet, but if we put a plus y, we'll be able to figure out. But we know we're subtracting 25,150. Eventually, this must give us 130,000, right? So it's more like an equation. And then if you have this equation, then obviously it's a little bit of mathematics. I'm sure when you joined this module, they said you need a background of mathematics to make sense of things. All right. So to make sense of things, so we can use a calculation of which is mathematical in nature. So we have y is equal to 130k minus this minus that plus that. Is that not correct? So 130 less 134650 less 40500 plus 25150. So I get it as a minus 20,000. So which means that this amount here, which is either a profit or a loss, is actually a loss of 20,000. So we have determined the loss. But now the question requires us to prepare the correct general ledger accounts, which means that we need to know the correct capital account, right? So as we know, the balance brought down is on the credit side. Additional contribution is on the credit side. This we don't know. Then drawings is going to be on the debit side. Then this balance carried down is going to be on the debit, because then it's going to be brought down later. So it's carried down at the end of the year, and beginning following year, it will be brought down on the other side. All right, so it will be on the debit because it's capital. All right, so what do we do? So we enter this on the credit as a balance brought down. We enter this as additional capital. We don't know whether it was cash or furniture or anything, but so we can just say additional capital. Then we enter this as drawings on the debit. We enter this as a balance brought carried down on the debit. Right. So if we do such a construction, we have our balance brought down of that amount. Then we have our drawings of this amount. Then we have our, don't know, additional capital, whether it was bank, it was equipment or vehicle, whatever it is going to be here. Then we have a balance carried down of 130. Remember, we haven't calculated this yet. So we still to figure out what it is, whether it's a profit or loss. Right? So for a capital account, from this you can see that your bigger side is the credit side, right? So, and then you have your bigger side as the credit side, and the smaller side is the debit side. So your debit side is smaller by 175, 150. So the balancing figure, if you subtract 25, 150, 25150, then you subtract 130,000 less 130123. Then you have 20,000. This 20,000 is on your debit side, right? All right. So we have a debit of 20,000. So a debit is a decrease in capital. So which means that the contribution from our profit or loss, the contribution of our income minus expenses. In our business, we make money, we also have expenditure. So the contribution of that is that it reduced our capital by 20,000. Because capital decreases on the debit, it increases on the credit. So this has to be a loss, right? So we're gonna say profit or loss, and then we say loss, all right? Because this profit or loss is actually the general ledger account where we record all profit or losses. But in this case, we have to identify that this is actually a loss, all right, that was made. And that is why we end up with lower, because we should have 175 minus 25, 150 if there was no loss, all right. But because there was a loss, then we have to subtract that 20,000 again. That's how we end up with 130,000 as the new balance. Okay, so that means that a loss was made, and this is going to be our balance brought down. So always pay attention to that. This is a brought down to mean that in the new year, but it was carried down or carried forward from to the next year. So in 2020 financial year, it was carried forward to the 2021 financial year. I hope that does make sense. So what you can do, you can try to practice and do these calculations by yourself. Try to see if you can construct the capital account here. Try to see if you can also construct the capital account here. So it's very important that you practice these things, especially if you are new to accounting, because they're going to test you on this, and you need to customize. Your brain needs to be used to doing the actual construction. You make mistakes, you see where the mistakes are that you make, and you're going to make an improvement. Right, so what you need to remember then is that when you are doing your capital account, right? When you are doing your capital account, if there is a profit, if you make a profit, then the profit or loss amount will be on this side. It means that you made a profit. But if you made a loss, then the profit or loss will be on this debit side. So in this case, we needed to know whether we made a profit or loss. So by trying to do a balancing on the actual capital account, we could determine that the balancing figure is on the debit side, which would mean it's a loss. If the balancing figure was on the credit side, then that would mean it's a profit that was made. All right. But we also did calculate with a bit of logic and mathematics. So I want you to please do keep practicing these things. You'll get them in your assessments, your final assessments, and they will help you a lot.